Plenty coming up today, big day ahead. Let's get more on what we should be expecting with Evan Lucas from IG in Melbourne. And Evan, as we've been saying, the outlook for the local market today, it isn't great. We've got SPI futures pointing lower, but there are a few game changers or possible game changers in the pipeline today in the way of company earnings and also that labour force data. We'll get some numbers from China as well. So could we well see the market change direction during the session?
Yeah, after yesterday's pretty much what was almost an overdone sort of sell-off yesterday, that 1.85% drop yesterday and losing almost over 90 points is probably what we will see today in terms of changing. And the fact that we're seeing two of the top 15 largest companies actually coming out with earnings today, particularly looking at Telstra. Telstra is actually one that's been really, really strong. It's up above the $5 mark. And as you just alluded to, there is expectations they may actually beat their own company guidance. They'd always had a fairly conservative view of what their EBIT was going to be, around sort of 4 to 6%. They did suggest it may jump into the 5 to 7%, and that may actually start to get the ball rolling also with regards to how the defensive plays look. They were hit very, very hard yesterday. The banks were shed quite heavily, considering they'd passed through the full rate cut from on Tuesday, and actually some bit more if you look at something like Westpac. So having a look at Telstra, what we're going to see today and what most people want to hear about is that dividend story. There is suggestions if they do get a better than expected NPAT result, and considering how strong their payout ratio already is, they're reassessing their dividend plan this current financial year, that's FY14, that it may even jump up into sort of 29 cents or even as high, some are calling for 31 cents for a full year dividend, and that will really get Telstra going again. We want to also hear how their 4G network and their mobile network particularly is picking up, and that's where the areas of growth in Telstra are going to be. So that's one of the game changers. We know very much about Rio. We understand what's going on. They are in a cost-cutting drive. The end of Alcan is not unexpected. It's been a fairly big drag on the company since it basically took over way back in 2006-7 is when we picked up with Alcan. It's been a disaster in terms of the cost that Rio paid for it, and the fact that the Chinese are producing aluminium at such a cheaper rate than what they were in Canada. So not unsurprising there, but again, as you already alluded to, it's the unemployment rate and the employment change that will be a bit of a game changer for the Aussie dollar and also how the Aussie market responds to that. We are expecting the unemployment rate to jump up to 5.8% from 5.7%. We know last Friday week when the government came out with their new sort of government plans that they expect unemployment to jump up to 6.25% by the end of this financial year. So that will also mean the employment change is pretty low, and that could see the Aussie dollar sinking below that 89-cent handle. In terms of that, I'm not sure it will go that far. The fact that we've seen the RBA hold their current rates, it may not move that hard, but it's going to be a very interesting sort of idea on the local front with that local news. Absolutely.
Evan, offshore, Bank of England last night, the new governor, Carney, coming out and basically attaching low interest rates, record low interest rates, to an unemployment rate of 7%, similar to what we've seen in the United States, but markets didn't react well to this. The FTSE losing about 1.5%. What in particular did investors not like about this?
Yeah, and it also caused the pound to jump up quite strongly. It sort of was a suggestion that maybe we are seeing better news coming out of the UK, and until we see any sort of bad news, if the unemployment rate ticks up even further than it already is, we may therefore look at, reducing their already historic low interest rates even further, and that looks like it may not be the case. They look like they've avoided the triple dip recession that was feared coming back in sort of April, May. We do see that their housing prices are slightly ticking a little bit higher, so there is green shoot news coming out of it, and for that reason there was an unwind in the shorting of the pound, particularly to the euro and also to the US dollar, and that's what we saw in movement last night, and that's why the FTSE also ran away, because the current stimulus program looks like it may be coming to an end, and for that reason we did see them shed. So it was interesting in that respect, and it did also see, considering that the FTSE is a fairly resource heavy sort of base like we have here in Australia, it could actually influence something like BHP and Rio on a sort of a slight idea. I must admit, considering that iron ore jumped up to $133.10 US cents a tonne, it probably won't, and BHP's ADR is moving higher in saying that, but it does sort of suggest that yes, the current stimulus program over in England may be coming to an end, and that the unemployment tie-up is actually a reason to start looking at holding rates, and maybe if it gets even stronger and the unemployment rate does fall, that they could even start lifting rates sometime in the next year.
Okay, Evan, just finally, plenty of action in Asia today. We've got some trade numbers out in China, but also a Bank of Japan press conference following a meeting over there. What should we expect?
Yeah, having a look at, first of all, with the Bank of Japan, if you have a look at what's happening with the dollar yen, the yen is obviously strengthening quite strongly over the last sort of 10 to 12 days. All 26 analysts that were forecasted by Bloomberg expect no change in terms of what the BOJ is currently doing with its stimulus program and also its rates program, and that is taking a little bit of the steam that we've seen in that depreciation out, and there is a very strong inverse correlation between the yen and the Nikkei, and that may also drag our market slightly lower. Moving towards to what we're seeing out of China today, the trade balance is what we're looking for. There is a fairly good lead indicator here. There's a very, very close correlation with what happens with Taiwanese exports. Taiwan came up with an increase of 1.5% in their exports yesterday, and expectations are for a 2% jump in the Chinese export numbers. Now, that is actually a good positive for our market. We have seen that the iron ore price is continuing to tick higher, and we have seen the exports coming out of Port Hedland on the way up. So if we do see a good number out of China on the trade balance number, particularly the export numbers, it may actually reverse the current negative news that's priced in and the fact that the SPI futures are pointing lower. So touch wood, we do actually get a good number out of China, and considering that lead we've seen out of Taiwan, it may actually come to fruition, and that may actually see us snapping the current 3-day loss that we've experienced over the last week.
Yeah, Evan, a really big session ahead today. Thanks so much. We'll catch up with you later.
Thanks, Kate. Have a good day.
Evan.